Greetings, members one and all of the Salivation Nation. Silver nears $25 an ounce. The end of low silver prices. Let's explore. Yes, we saw silver move today. 81 cents as of the recording of this video. Quite a big move, well over 3%, far outperforming any of the other precious metals on the chart here today. And that's just it. Silver is more volatile. It is undervalued, and I still believe it's undervalued. The gold to silver ratio is now at 74 to 1, essentially 74.03. Now, the title of this video is The End of Low Silver Prices. I do believe to be that to be the case, but that is merely my opinion. This is why I've stuck with my prediction throughout the year that I believe we will see before the end of the year silver touch $30 an ounce again like it did last year. Maybe between $30 and $35 an ounce. And I've held true to my prediction throughout the doldrums of the summer. Well, just like the weather is starting to shift and change after Ida here in the Northeast, it's starting to kind of cool off a bit. And I think that the cool silver prices are starting to wane off as well, and they're starting to heat up. With an 80-cent move today, people will be screaming at their screens as they listen to this video and say, well, it's just one day's movement. It could go down tomorrow. Well, actually, it won't because it's the beginning of the weekend. But nonetheless, next week we'll find out. We do a market watch when the markets open up in Asia at 6 o'clock Eastern on Sunday evening. So stay tuned for that on this very channel for that live stream when we monitor the markets as they open up in Asia. And but nonetheless, prices could fall back down to, well, $23, $22 an ounce. But I kind of doubt they will. Again, that's my opinion. I'm not a professional analyst by any stretch, but there's so many things that are going on in the economy. I believe there's much more happening in the economy and the sentiment around the world, really, that I think are bullish for silver. Let's take a look at what happened today. We can see the Dow has fallen after a big jobs report miss. Tech stocks gains, limit losses there. That's the breaking news of the hour as we look at CNBC. Gold has climbed as slower U.S. jobs growth clouds Fed taper timeline. And this is coming to us harvested from Reuters. Gold advanced more than 1% to its highest in 2.5 months on Friday as a slower than expected U.S. jobs report in August drove the dollar lower, casting doubts on the Federal Reserve's tapering timeline. Spot gold was up 1.2% at $1,830 per ounce early in the afternoon after hitting its highest since mid-June at $1,833.80, on track to its fourth straight weekly gain. U.S. gold futures settled 1.2% higher at $1,833.70. So job growth came in well below expectations in August amid a jump in COVID-19 infections from the Delta variant. The dollar index slipped soon after the report, bolstering gold's appeal for those holding other currencies. By the way, there is rumor in many school districts out there that to be prepared for a shutdown of schools. And that is going to affect parents who need to work, who will have to find childcare for their kids. And I believe that's part of what's precipitated this. Gold received a welcome boost from a much weaker jobs report, said Saxo Bank analyst Ole Hansen. But the fact that gold has failed to break above resistance at 1835 could indicate some skepticism about whether this means peak growth and delayed taper. Of course, we're not talking about silver here, but silver has greatly outperformed gold in this regard here, at least today. But one thing we have to keep in mind, the volatility of silver can work against us and it can fall back down, which is why we watch the gold to silver ratio and to kind of see what that normal is. And I believe that the new normal, at least for the gold to silver ratio, is somewhere in the high 60s probably. Fed Chair Jerome Powell said last week that if job growth continued, the Fed could start cutting asset purchases this year, in other words, tapering, but would remain cautious about raising interest rates. The knee-jerk reaction was positive for gold, as a big miss with the headline number pretty much ruled out a September taper, said Ed Moya, senior market analyst at foreign exchange brokerage Oanda, putting it on a course for a break towards 1850. Some investors view gold as a hedge against higher inflation and may follow stimulus measures, while lower interest rates reduce the opportunity cost of holding non-yielding bullion. Market focus will shift to the September FOMC meeting next. We continue to see further upside risk for gold in light of our expectations for the U.S. dollar to weaken and real yields to remain deeply negative, said Suki Cooper, a precious metal analyst at Standard Chartered Bank. Silver jumped 3.4% to $24.70 per ounce, while platinum was 2.6% higher, $1,024 per ounce. Palladium rose 1.1%. So very interesting indeed, and we can see here from this article from Kitco, gold is making a move higher as tapering expectations get pushed to 2022. Long, quiet summer. The gold market is starting to attract some bullish momentum. Both Wall Street analysts and Main Street investors see higher prices, according to the latest Kitco News Weekly Gold Survey. I find these interesting and fascinating. I report on them as often as I see them, and I think it's pretty cool to see, and it falls in line with my prediction as well. Analysts said that gold could be starting a new run higher, with a $1,900 possible target as investors start looking for the Federal Reserve to delay its plans to reduce its monthly bond purchases. The dramatic shift in monetary policy forecast supporting gold prices comes with the U.S. Labor Department said that only 235,000 jobs were created in August. The data significantly missed expectations, as economists were forecasting job gains of 720,000, well over double. The jobs gains were well below even the most bearish estimates. It even called out Sleepy Joe Biden to make statements and tried to soften the blow to prevent an even further market panic or whatever, which I don't think it really helped, but I don't think, it really caused that much difference in what happened today. The Federal Reserve isn't going to hint at a taper in September, and they'll only get one more jobs report before the November FOMC, said Adam Button, chief currency strategist at Forex Live. And in other signs of weak U.S. growth and taper, odds continue to fall. As the third quarter disappointing growth spreads to the fourth quarter, gold will break resistance at 1834 imminently and continue higher. Another thing we have to take into consideration is that this month marks the end, at the end of this month, of federal unemployment benefits. In other words, the federal government paying states to keep unemployment payrolls or unemployment benefits going for those who have been unemployed for a long time, and that's what's preventing a lot of these companies from hiring. And I believe that Congress will probably extend that unemployment benefits even longer. And that's going to mean more money printing, or they'll throw it in with the infrastructure package, either one of them or what have you. We'll see how it plays out. This week, 15 Wall Street analysts participated in a Kitco News Gold Survey. Among the participants, 10 or 67% called for gold prices to rise. At the same time, 2 analysts at 13% called for lower gold prices next week. 3 analysts at 20% were neutral on gold in the near term. Let's take a look at this. So Wall Street, 67% are bullish on gold. And by extension, I believe silver too. And the fact that silver is outperforming gold with this, I believe, does say a little something, even though with the volatility that could come back to bite us. And so when you have the majority, even with the combined numbers on Wall Street of the bearish and neutral, that's only 33% compared to 67%. Main Street is much the same. 65% are bullish, with 19% bearish and 16% neutral there. Fascinating indeed. David Madden, market analyst at Equity Capital said that he is watching the U.S. dollar. If the U.S. dollar index breaks below 91.75, the gold will be going much higher. However, he added that he would like to see gold prices push above $18.35 an ounce, which remains a significant short-term resistance point. He said that gold has tested and failed to break this resistance level 3 times this year. I'm bullish on gold, but still a bit cautious, he said. I think tapering is off the table in September and is unlikely in December, so it is more likely to come in March, and that could limit gold's upside. And so that kind of falls in line with kind of what I'm thinking for gold and silver. And by the way, I predicted that gold would touch $2,000 again this year. That's a little bit further of a stretch, I think, but it could happen. Jim Wyckoff, senior market analyst at Kitco.com, said that gold bulls have a clear technical advantage, and he's looking for higher prices in the near term. Psychological and technical advantage, I think we're in line for these prices. But, again, all these people could be wrong. Every single one of them, including me, could be wrong. And as is the case, typically, when we see movements like we're looking at here today, a strong day, we're saying one strong day, does not mean that this stuff will just snap right back in the other direction. We could have another week of doldrum, of low prices, falling prices again. That very well could happen. But I believe still this year, there's a lot more stuff that's working in gold and silver's favor for the upside than not. But we'll see how it plays out. And that's just it. I don't stake my reputation on this, on making predictions to where things are going. I only make them because I like to watch and analyze kind of the news of the day and kind of where things go, to talk about it at least. But it also gives us a chance to illustrate the fundamentals of gold and silver. They typically go up when there's concern about the economy. And so when we see these things happen on a daily basis here, when silver moves up 80 cents in one day, there's these triggers that cause it, to cause that move upward and also downward. And we've talked about that with an interview with a strategist who knows his stuff, where there's some of these automatic triggers when these things happen. There's buys and call. You can get an alert on your phone or whatever when the prices go down and reach a certain level to buy, and then you say, okay, silver's fallen, I'm going to buy now or later. Now you have to make that decision. But some of these are essentially algorithms that are written in place for some of these high frequency trades that occur based off of, hey, if this economic indicator hits this, then buy. And that occurs there. And by the way, that's not manipulation. That's just simple programming. And so we can have a machine learning on when to make a trade based off of economic indicators. Those are natural market forces. They're just natural market forces that happen to be programmed. Think of it as like a bot, and we know about bots, those of us who have been buying from the U.S. Mint lately. But this is a case where it's done legally and based off of triggers that are economic triggers. So there you have it. So let me know what your thoughts are in the comment section below. I believe this is the end of low silver prices. What do you think? There's no wrong answer there, by the way. In fact, many of you could probably find a very cogent argument to the contrary for silver, and gold for that matter. All the metals are in the green today. So let me know what your thoughts are in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.